Who's here for the first time tonight? Raise your hand. All right. Well, welcome. I'm Danko. The crowd around you is the community of Crypto Hub. We are a community passionate about blockchain technology and its applications, and we meet here every Wednesday to promote it and to share our experiences along the way. Could you please put the crypto? So this is our website, and on the top you can find all our social media. We are on Telegram, Instagram, Facebook, and Meetup. Next to the balcony, there is a stand with a QR code. You can scan it so that you can join the Telegram group. Can you hear me well in the back? And if you like what we're doing, please support the amazing job that Ferris, Magda, and Maria are carrying on every week to grow this community, and you can do so by liking and sharing the posts on Instagram and on Facebook. That would be highly appreciated. Recently, we have started our new YouTube channel, where the lovely Sabine is uploading little by little the old recordings we have done, and the amazing Nico is live streaming. Thanks to the live streaming, I don't know, did you go there? Have you ever seen these recordings? There are some true gems in there. You're highly encouraged to go and have a look at all the videos that are collected there. So, thanks to the live streaming, the Crypto Hub Bucharest, the newly born Crypto Hub Bucharest, can follow up with what we are doing, and they can participate to the question and answers. I like this so much. It's crazy. So I love it a lot. None of this would be possible without our supporters. In first place, Soho. Soho is this building where you are right now, providing us with this beautiful, beautiful, beautiful room. They offer co-working spaces and business presence solutions, and even catering services here in this location and in Savoy Gardens, the other location. Simply Staking is a legend because with their nodes that they are running and the Oracle and staking services that they provide and their consulting, they are literally the backbone of, part of the backbone of the blockchain, right? So the Bit Research, another Maltese company. It's a trading company researching in DeFi and automated trading strategies. By the way, I'm pretty sure that some of you here are developers. They are constantly looking for trading bots developers. So get in touch with them if you are interested. Last but not least, WH Partners. A well-established law firm, pioneer in the crypto landscape, and located internationally in several countries: Italy, Dubai, Poland, Romania, Czech Republic and Slovak Republic, and I'm pretty sure some more locations.
For now, that's it, but some will follow in the coming years.
So, speaking of WH Partners, this is Joe Borg, a top-ranked lawyer in the fintech, partner of WH Partners. Hello.
Don't celebrate too much.
Congratulations. And top-ranked lawyer in fintech and OG in blockchain and virtual assets. So, before we continue, I want to ask you a question. What comes to your mind if I say blockchain island? Well, I would have expected some people laughing here, but for those who don't know, In 2017, the Maltese government tried to promote Malta as the blockchain island. It was an ambitious plan. Here you can see an article from the Times of Malta dated 2018. So it was an also, there is also an interesting video on YouTube titled Blockchain Island by the Cointelegraph, if you don't know and you want to know more about that. So it was an ambitious project, but it didn't completely work. What was back then the main problem? Well, banks were one of the biggest problems because they didn't have the legal framework for these innovating companies. And so crypto and Web3 projects which were seeking to bank the unbanked were unbanked themselves, right? Now, Joe and Galina, in 2022, they actually published, next one. Yes, it's this one. They published this article in Times of Malta. And they were saying that things are changing. There is especially a sentence that I want to read to you literally. Nico, if you have it. Otherwise, I will read it from here. It is time for skeptics to realize that crypto assets are a reality that will not go away. I want an applause here. So, why things are changing? You know that there is MiCA, this new legal framework that is opening to new ways. For instance, they are opening to opportunities of having crypto-friendly banks. So, tonight, Joe is here to interview Miguel Attard, who's a representative of Sparkasse Bank Malta, the first crypto-friendly bank on the island. Without further ado, I will leave the floor to Joe and Miguel. And let's welcome them with a warm, warm applause.
Thank you. Yes, it's on. Thank you very much. So guys, here in our community, we are not big fans of banks, right? But but I really hope that today you really give a big welcome to Miguel, because Miguel is not like most other bankers. I've got to know him over the past couple of years, and he's an amazing person, apart from being a very brave professional, I would say, because he has done a lot to change the vision of Sparkasse Bank in Malta. He has been in each and every event. As soon as I told him, come, let's do a fireside chat at Crypto Hub Malta, he didn't even think for a second. He told me, let's find the date and let's do it. So we really need more people like Miguel in the banking industry, in the traditional financial services industry, because as much as maybe most of you are still living the ideal that Bitcoin is going to replace completely the banking system, that is, in my opinion, wishful thinking. I wish that happens as well, just like you guys, because we've seen what has happened over the years and how things got manipulated by the traditional financial sector. But at the same time, we know that it is a very unlikely reality. So right now, in order for crypto to thrive, it needs to become interoperable in some way or another with the traditional financial system. And the best way we can do that is having people like Miguel who are open, who try to help crypto companies, and I can assure you he goes out of his way to try to help. And these are the people that we really, really need to help our industry grow. Miguel, say something about yourself and then we'll start with some questions.
Quite the intro, thank you. You're too kind. So, Miguel, Attard, I don't believe I've met many of you before, so pleasure meeting everyone. Thank you for having me here. Traditional banker of 14 years, always looking at things with an open mind and a different perspective of how we can do things differently.
But they exist.
They do. In their rarity, like literally. We're the 1% of banking. But what Joe forgot or didn't know, actually, I had a little bet with Ferez a couple of months ago, which he probably forgot, I'm thinking. But I met Ferez not more than 6-7 months ago, max. And after being introduced to him, all of a sudden, he's everywhere I am. And he was introduced to me as the crypto hub guy in Malta. I didn't know who Crypto Hub were. So, again, my failure there. But he had a bet with me, I think it was around November or early December. And I don't know, I can't see Ferez anywhere, but he'll probably, there he is. And he'll remember what I'm about to say. But we had a bet where he said, the day Bitcoin hits or exceeds 100K, you have to come to Crypto Hub and talk. And I'm like, yes, okay, it will never happen. Sure enough, weeks later it happened. Weeks after that, Joe's giving me a call, telling me, we have to do this, let's do this, what do you think? Yes, it's inevitable. It's the way forward. However, because I am a traditional finance guy and I work for a traditional credit institution, I am bound by disclaimers and regulation. So whatever I say is my own personal opinion and not that of the bank. And we have that out of the way. So yes, traditional banker, 14 years. I came out of uni, joined the bank. We were 12 people at the time with a very small balance sheet. Today, we're approaching 150 people. We're based in 3 jurisdictions, one of which I was a part of in establishing. That was in Ireland. We established a branch focusing on depository and custody services. We hold multiple licenses in Malta, that of a traditional credit institution, financial services, and a bunch of other licenses that allow us to do what we do. And now we're looking into providing a solution to the MiCA space and possibly other avenues moving forward once we are comfortable in the natures of business that we are servicing.
Very, very well. So going back to that article that Damiano made us a surprise with, when we wrote it, we said, the blockchain island is dead, long live the blockchain island. And the whole point of that article was, look, everyone thinks that Malta, the blockchain island concept was a failure. And it was a failure in terms of marketing by government, definitely. Even some service providers have overdone it. And we did, I wouldn't say us as WH, but there were some people that have really tried to milk the situation, and they tried to also promote what Malta could not achieve. So there were many mistakes at the time, and I believe that we ruined a bit ourselves because of the over promotion. However, saying that it was dead was wrong. The concept that many people had in mind was dead. But in reality, the companies that moved to Malta at that time all remained here. So the ones that actually got a license, let me rephrase, the ones that got a license all remained here. And thanks to them, today, we are reaping the fruits of that because we are inundated with new companies moving to Malta. So the fact that we managed to get people like Falcon X, people like Crypto.com, people like, well, there were around 15 at the time, Everest, Payhound. These companies kept our dream alive of having Malta as a hub for crypto. And Pun intended, of course. So at the end of the day, then we got the others, the companies coming like Bitpanda, as of recent Gemini, we've got Socios, and we're getting all the big companies moving here. So that wasn't a failure. The marketing of it was a big failure. It made more damage than good, but it wasn't a failure. And our law was proved to be correct when Mika came out, because Mika was a photocopy of our law. But let's go back to the topic of today. But it is related because, of course, now that Mika is in effect, how are banks in Malta, and maybe also with your discussions with other banks across Europe, how are they adjusting their risk appetite towards when it comes to working with crypto companies and businesses?
Let's dial it back, okay? We're going back to 2017, 2018, maybe a little bit to add on the dream of Blockchain Island that did not quite materialize. I think one of the fundamental problems there was, you said the marketing of it or the overselling of it. There are two shortcomings, in my opinion, there, where one, there wasn't an industry-wide stakeholder conversation. So in a firm, in any firm, I can come out with a dream, but if I don't have the buy-in of my colleagues, if I don't have the buy-in of whoever is involved, you are just going to hit one hurdle and one brick wall every single time you literally turn around the corner. Another thing. Another problem, another problem. And the fundamental problem in the Blockchain Island dream of 2017, 2018 was the banks were not on board. And why weren't they on board? Because there was no fundamental regulation around it. There was an idea, there was a concept, and as a result, there was a lot of interpretation. We're going to do this, we're going to do it that way, we're going to go this way, we're going to do that. And yes, the players were attracted to Malta, but the players were attracted to Malta on the premise that there was going to be a fundamental legislation, a way forward, a categorization of interpretation. Correct me if I'm wrong here.
But there was in 2018 then?
Loosely, in the sense it wasn't fundamentally adopted industry-wide. So as a result, the banks could not take it on as this is the way forward, this is the way it's going to be legislated, this is how it's going to be supervised, and how the competent authorities are going to be in a position to enforce.
Well, in Malta it was. In the rest of Europe, no. But
it was open.
In Malta, we had those 15, and there was a problem, so the marketing was wrong two ways. So first of all, it tried to attract every Tom, Dick, and Harry in the crypto space to come to Malta because it promised them the land of opportunity, when in reality it turned out that we had a very tough regulator. It was the toughest in the whole world. All right? The only one that was close to us was Abu Dhabi at the ADGM. The others were all a joke. And they are still a joke, those that are applicable right now in the transitory period to Mika. So they are just a registration with the AML authorities, which is nothing. But it was also a problem, the marketing, because the other countries, so the companies came and saw this massive regulatory framework and said, no, this is not what we were promised. And the foreign countries that were already taking target at Malta for other reasons, of course, they found the opportunity to say, well, you guys are trying to do this safe haven for cryptocurrencies, you're not going to regulate them properly, and they didn't even bother going through our framework and understand that we had the toughest regulatory framework of all of them. But that was the wrong marketing from the government as well.
Which was not what these companies wanted. Ultimately, they didn't want that perception.
So it was a double-edged
Exactly.
sword, let's call it that way, because we're getting it hit from the businesses who said, look, this is not the right place for us because this is too tough, and from the general perception of banks and states who were saying, well, Malta is going to loosely regulate everyone. So we got it both ways. But then, in reality, those 15, in my opinion, the bad situation was that banks did not really bank those 15. And that is where it went wrong.
Agreed, totally. And then I think the turning point was MiCA. So we cannot see Malta in isolation. When it comes to banks, there's a broader spectrum, broader relationship of correspondent banks. The banks in Malta are essentially, their appetite is dictated to a certain degree by their correspondent banks. So if their correspondent banks say, we do not want anything crypto related, we are in a very difficult position in trying to provide a solution to crypto-related industries, because we can onboard you, but then we can't facilitate your payments through our correspondent banks. So it's very difficult to provide a solution which, to a certain degree, requires correspondent banks, requires foreign currencies, and you don't have that solution for it. You're just going to look silly as a bank. So generally, the banks took a step back and said, look, for now, we don't have the appetite. Come MiCA, MiCA was a turning point. MiCA was a European-wide regulation, which opened the doors for banks to look at things differently. We took it very seriously, very early on, and we saw it in a different light. We saw it as an opportunity that allowed us to have these conversations with our correspondent banks and with other stakeholders in the industry and say, look, this is now becoming a European-wide reality. And how can we support those firms locally as well as internationally in providing them a solution? And it is only thanks to MiCA and the European-wide adoption and understanding and ultimately regulation, because it is the regulation that brought the comfort to the industry to be able to start having those progressively positive conversations that bring us to where we are today. That has brought me to speaking to you, or a very candid fireside chat, as we're putting it, with the fireplace behind us, 20-degree weather outside, but okay, on the topic, which I think, to be fair, there aren't many banks locally. There aren't many banks locally because they are traditional retail banks who are focused on the local traditional high street product, which is savings accounts, mortgages, keeping it low risk, understanding their customer through and through, supporting local economies, supporting the housing market, supporting Joe Borg and Mayor Spiteri with their savings, just collecting cash, letting that money accrue and pay.
Try to use another name if you have a Joe Borg.
Sorry. Then Mario Borg, whatever. Joe Blogs, happy Joe Blogs. Where for them, they are trying to avoid what is to be a perceived higher risk industry. You don't see the traditional banks in Malta, the high street banks that are servicing gaming companies, that are servicing the crypto space, that are servicing industries that for them are pooling and aggregating clients' assets, or dealing with firms that are internationally exposed in a very fast-paced, high-volumed activity. We don't. There are very few banks that are first catered for it, have the technology built around it, but more importantly, have the appetite. So it's up to those banks that, like ourselves, for example, that are taking the time to understand the regulation, understand the industry, take the time to speak to the market participants in understanding what their requirements are. Because we can provide the fiat solution. Tomorrow, who knows, maybe a digital crypto solution may be in play, but at the moment, the banks can provide a fiat solution, and that is already a leap forward to 2 years ago.
Technically, you can provide crypto solutions as well, because banks can actually, under MiCA, have a priority.
With the top-up. So, but I don't think we're there yet.
That is one of the questions that I was going to ask you, in fact. Do you see banks in Malta actually get into crypto directly, at least doing some custody, for example?
Watch this space. That's all I'll say. Look, I think, no, in reality, traditional banks I can't speak on their behalf. I think those banks that have foresight, are open to it and have an appetite, but more importantly, have an understanding of the potential risks, then it's going to be a very interesting space in Malta where we have some very big global players that can support the banks, that can educate the banks, but more importantly, work hand in hand with the banks. It's going to be, I refer to these couple of years as the dawn of a new financial era. And why is that? Until 5 years ago, you had traditional banks working in isolation, working in their own little vacuum. You then had EMIs and PSPs come out in force, and they exploded throughout Europe. And I think the majority of us, if not all of us, do most of our banking, most of our financial dealings through an EMI or a PSP. Maybe hold a balance with a traditional credit institution. Tomorrow's financial industry is going to be what I think a beautiful symbiosis between the crypto space and the traditional financial space that we live in today. And with the two morphing together and becoming one solution, we're going to see very efficient, fast, instantaneous payment settlements. Very cheap, if not cost-free. And at the end of the day, a limitless and endless potential to solutions, to transacting globally. We're not going to be dependent on a particular payment network infrastructure that has its own appetite. We're going to be able to settle instantaneously. If I need to settle with Mr. X or Mrs. Y or whoever, I can do so digitally, not through a mobile banking application, which only came in force as a result of COVID 4 or 5 years ago.
Miguel, here we have a lot of people that are not working or are definitely not owners, and most of these people are not even working with crypto companies that have a license. Most of these people are traders. How many of you are traders, guys? Okay, and how many of you are developers? Okay, so a good percentage of the people here are either traders or developers. And so developers get paid in crypto. Traders are obviously all the time dealing in crypto. And these guys have also a problem to get banked. Is there a solution for these people? With banks rather than EMIs, because there are many solutions with EMIs, of course, but with banks.
Let me put it this way. Let me tell you what we do as a bank. If you have an account with us, we are not averse to accepting fiat from crypto exchanges or crypto-related EMIs. Okay? So if you get paid through your service providers or your clients or whoever in a crypto asset and you're holding it in your wallet, that's your business. If you convert it into a fiat currency and want to transfer it to your account held with us from an account held in your name, that's something which we are open to. So it could be a solution. It's not necessarily the solution people are after, because even to have an account with us, it's not exactly easy. We're a very niche, bespoke solution. We tend to service the B2B rather than the B2C. However, there are instances where we have opened up relationships for the retail customer, but it comes with its caveats.
So possibly a software development company
possibly
could possibly use your services.
And these are things which we are now increasingly starting to see. And why is that? There are entities nowadays, especially in Malta, who are either a licensed VASP or now a licensed CASP, that are acting as the intermediary between customers of ours who are traditional B2B firms that are maintaining soft wallets, holding digital currencies, and need to convert to fiat. So they are using that intermediary to convert the crypto into fiat and then transferring it to their account held with us via that intermediary who we already know. So the possibility is there. We are seeing it. It's becoming an increased activity. And more importantly, we are regularly being asked for this solution. And when we tell them, look, we have this in place already, it's like, are you serious? So it's a novelty, which people don't.
Which have you changed the platform or not yet?
Nearly there.
Nearly there.
Literally, it's now imminent.
Okay, good.
But we've seen
Some
too many
breaking news, guys.
We've seen too many other banks in the past couple of months internationally who
Screwing
have
it up.
converted, have encountered issues as well. So we're just ensuring all the I's are dotted and the T's are crossed and the kinks are ironed out.
You also service a lot of gaming companies, and particularly B2Bs are also dealing a lot with crypto nowadays. No issues there? How many of you are in the gambling industry? Okay. All right.
Again, that was one of the case studies, you know, those proof of concepts that we used where they themselves were being paid in crypto because they were operating in certain jurisdictions where it was tough or difficult to accept those currencies. So there were restrictions on foreign currency transactions. So what they are doing is dealing and getting paid in digital currencies, in cryptocurrencies. They convert it to their traditional fiat operational currency and transferring it to their account with us via the VASP or the CASP that they would have used to convert that digital currency.
All right, let's shift to something more controversial now, because till now you didn't really say anything controversial.
I'm treading carefully. I don't want to be thrown over the
It's
side.
crazy how a banker here hasn't said anything controversial in our environment. So
That 1%, Joe. Remember, 1%.
so, from a banker's perspective, how do you see CBDCs coexisting or competing with stable coins? And do you see do you see them as something positive? Let's start from that. Do you see them as something positive or negative?
Okay, let's
Let's
start
try
with
to
this.
get him here.
Let's start with this caveat. I cannot say I am an expert in the industry and on the topic of CBDCs especially, but like I said earlier, where traditional finance and the crypto or decentralized finance are going to coexist and work together, I think CBDCs and cryptocurrencies, again, need to work in a symbiosis whereby you can provide a solution for the institutional transactions versus the retail. Where, I mean, CBDCs, let's get controversial. Mela, cryptocurrencies, what brought about cryptocurrencies? My interpretation here. Privacy, anonymity, speed of settlement, no cost or very little cost. That's coming in CBDCs. It's the ability to own what you are transacting. And having no one above you telling you how to use or what you can use your cryptocurrency for. It's global. CBDCs, or my understanding of CBDCs, are the central bank equivalent of traditional fiat currency. So let's call it Fiat 2.0, where your traditional central bank issuing a CBDC is going to have access to all your data, is going to know what you are using those CBDCs for, is going to have full transparency on that transaction insofar as who remitted it, same with crypto, but who's receiving it. You have all the KYC and CDD there linked to that CBDC. You are in a or they are, as a central bank, in a position to continuously enforce their monetary policy. So your flexibility of cryptocurrencies is lost. Your privacy is lost because it's fully transparent. The government knows exactly, or the central bank knows exactly what you are doing with your money.
This guy is one of us. Can you see that?
1%. So ultimately, you come to a point where, yes, I think in an institutional world, CBDCs are going to really work. Why is that? Because CBDCs can be a solution to your traditional payment infrastructure, your global network rails, without mentioning specific brands, because again, Ferez, you pulled a fast one on me, streaming live and recording, where they're in a position to provide settlement rails at an institutional level. So it can be used as your institutional global method of settlement, as well as domestic payments.
For me, to be honest, I am not completely against CBDCs in this sense, and I'll qualify this. If they are allowed to exist in parallel with the rest,
why not?
Then I have no problem. If you want to use CBDCs, it's your problem, use them. And there are some corporations that will need to use CBDCs to do certain levels of transactions, okay? So that I understand completely. However, our fear is that if CBDCs, it's also difficult to say actually, CBDCs become a reality, our big fear is that they will become a reality with the aim of replacing crypto, and from a regulatory perspective at least, they will make everyone shift from crypto to CBDCs, and crypto will go back to the underground market, let's say. And that is the biggest fear, of course.
Okay, so let's look at it this way, maybe. Mika. January, Mika full force. We are now nearly end of April, so we've got 4 full months of Mika. And last time I checked, there were maybe a dozen approved EMTs. So let's assume they all have their own stablecoin, Mika regulated stablecoin in either euro, dollar, or any other foreign currency. One of which, coincidentally, is actually a credit institution, a traditionally licensed credit institution. So that's already like, wow, traditional bank issuing its own stablecoin. Like, that's a bank you want to work for, and they're like forward thinking. They're already setting the pace of knowing where this is heading. So at a retail level, those Mika regulated stablecoins are going to be a solution. But Mika is Europe-focused. We can't lose the global focus. We can't open our perspective enough and realize that, look, there is a global adoption of cryptocurrencies, a global adoption of coins that are being issued, that if they are properly designed stable coins, then you know what? They will withstand the test of time and they will be adopted. As long as there is widespread adoption, then they are going to be there to stay. CBDCs, again, for me, it's an institutional thing. If CBDCs, so if the ECB were to issue a euro coin, which they probably will come 2026, 27, they won't be doing it this year, and there will be a Fed-issued dollar coin, then yes, it will be adopted. But again, the widespread adoption and take-up of something is going to, it's all about first movers. Stable coins are there. They are there to stay. And there are some significant players issuing coins, and they are being adopted. They are being taken on. So, Bitcoin. Controversial. Not your traditional settlement choice or choice of settlement for transactions or for whatever it may be, but it is unregulated. It is here to stay. Why is it? Because it is your crypto asset in its purest form. It is there to stay. And why is it there to stay? Because it is widely adopted. there are so many users and so many people who have bought Bitcoin, and they are going to hold on to it. And they are going to hold on to it because it is crypto in its purest essence. And they will continue using it. And so, again, I go to that point of widely adopted and embraced. If you're going to have a regulated product today in a stable coin versus a CBDC, both of them are going to coexist together, because one is going to serve the institutional market and the other is going to serve the retail market. And together, they will create their own symbiosis.
I agree. And that's why I said I'm not fundamentally against the creation of CBDCs. First of all, it will help with mass adoption, because people generally first will start trusting more the government for some reason. I have no idea why some people trust the government more. But anyway, it still happens in our world, unfortunately. And so automatically, if it's coming from the government, they will trust it. They will learn how to use it, and then it will be easier to shift them to crypto. However, at the same time, my fear is what happened, for example, with let's say, with USDT now. So USDT has seen a big drop in usage, a very, very, very big drop in usage, because Mika has sort of banned it. It hasn't banned it as such. It has banned cusps from allowing it to be listed. So at the end of the day, we know that regulation can still harm crypto. And that is my fear, that once they introduce CBDCs, they will come and say, look, but now in order to convert your crypto into a CBDC or into a fiat, there are a number of hurdles. That is my biggest fear. For the rest, who wants to use CBDCs? Use them. It's fine. And as I said, I think it will help with the mass adoption of crypto.
Your traditionalist, your Mary Spiteri in the street, who might not truly understand the space or the crypto world or crypto assets in general, and is forced to go down a digital route, would probably be your typical adopter of CBDCs. So look at it that way.
That's exactly
the skeptics will go down the CBDC route because they trust the government, they trust in guidance, they trust in following the masses. Those people that adopt cryptocurrencies or stablecoins in general are those people that are wired to think differently, are willing to take on a bit of risk, and for that risk, they could possibly be rewarded.
Agreed. So let's open a bit the floor for questions, because I'm pretty sure that this is a once-in-a-lifetime opportunity to ask a question to a banker who is on our side. Yes, the guy in green was the first.
Hello. It's very encouraging that banks are finally getting on board. I mean, I was in the space way back before 2017. I actually came up with the term blockchain island. It was the first thing just to clarify some errors that maybe have been said here. At the time, we had actually had the endorsement of the banks, Bank of Valletta in particular, the central bank, and also through the Malta Central Bank, we had actually got an okay from the Bank of International Settlements to actually pilot a legal certainty for the crypto space, which would have been unbelievable achievement for Malta. This space is now a 3 trillion industry, and had Malta not destroyed all prospects, Malta would have been at the center of this enormous industry. And just with no disclaimers, this space was completely destroyed by the current industry minister, Silvio Scembri. It was his inaptitude to, just not understand.
I don't agree that we can
I mean,
pin
I
this
was
on
there.
one person. I think
Yeah, it was.
it
I
was
can
a
assure
joint
you-
venture of people who
I can
actually
assure you, I
ruined it.
was there from the start. I was the person who actually convinced the government to actually go for the space. I came up with the blockchain, and I know exactly what destroyed it. Thank you.
What was the question? Thank you for participating. Yes, please.
So a question and a comment. First of all, thank you for sharing your thoughts here and sharing with you, since you sort of mentioned it, the roadmap for the European Central Bank stablecoin is out, and we should have a stablecoin in 2028. So that is already in line and communicated. My question here is, we spoke about differentiating CBDCs, claiming that they are the institutionalized coin, while looking at BTC protecting its what we call anonymity or privacy. First and foremost, one needs to understand and make it clear that this is not anonymity, but pseudo-anonymity. And secondly, one would need to understand why and if banks such as yours are finding comfort in the Trevor rule. So now even a BTC to BTC transfer, Trevor rule needs to be supported in the sense that sender and receiver need to be clearly identified in line with CBDCs. Interesting to see how you would look at this development, whether it would, as a bank, you would find the same comfort, just like you would find in a CBDC. Thank you.
Thank you. Actually, thank you for correcting me. You're right, 2028. Let's talk about the travel rule. So banks have adopted the travel rule, or what is known as the travel rule. We've had to adopt the travel rule for years. So it's in essence is, if you don't have the travel rule or identification or linked to a transaction, it's an unknown to us, because that's all we've been doing. So for us, it's a level of comfort, which quite frankly is a minimum requirement. Now, as a bank, we don't get involved in the transaction or the digital transaction through the chain ourselves. So what I am aware of, though, and you mentioned the travel rule, is the following. Yes, it is a requirement, but how many of the VASPs and CASPs today, and controversial point here, are fully adopting it or are in a position to fully adopt the travel rule? And why do I mean that? Because today, VASPs and CASPs are also dealing with non-MiCA regulated entities. So if that non-MiCA regulated entity is sending a transaction or is involved in a transaction and does not include those details, then technically speaking, the MiCA regulated entity that is receiving has an obligation to either reject or report. Now, if they reject, they're going to lose business. I don't think today's VASPs or CASPs are going to willingly reject business or lose business. So whilst they have an obligation, yes, I think we are probably closing an eye in that respect till everyone is fully committed to adopting the travel rule, and something which all the players are struggling with or having an issue with at this point in time.
If I may, on the travel rule, there's also another problem, the interoperability of systems. So a lot of systems that are being used are not interoperable, and there's no communication between the systems. So that is a typical error of introducing a law before actually planning it out and how it's going to work. Because before you actually plan that law, you create some standards for these systems to become interoperable first. Because they created a rule, everyone started putting on creating their system, and now we have a problem where one cusp is trying to communicate with the other cusp, and the system of the other cusp does not understand what the originating cusp is saying. It doesn't work.
Each chain has different standards.
But apart from that, the tools that are being used for the travel rule, to implement the travel rule, there were 5 or 6 main tools created, and some of these tools are not they are not understood by the other tools. So basically, you're getting garbage.
Joe, for everyone here, could you please explain quickly what is the travel rule in details?
If you're in this industry and you know what the travel rule is, we have a problem. So
I get it.
the travel rule is basically what they try to create at a FATF level, the financial action task force, which is an international organization, obviously run by the USA. So so ultimately, the FATF has come up with this genius idea of saying, banks, when they communicate with each other, they inform the other bank when there's a transaction. So Sparkasse is sending money from my account at Sparkasse to, I don't know, Galina's account with BOV, for example. Then Sparkasse will give certain details about me to BOV, all right? So that they see from where the money is originating. And they said, we should do the same for crypto. Can you imagine how genius these people are? And they created this travel rule. Now, developers try to create software that allows for this communication to happen. But again, there was no standard on this software. So the problem we have today is that 5 or 6 of these softwares were created, and one doesn't communicate with the other. So if the crypto equivalent of Sparkasse is communicating with the crypto equivalent of BOV, not necessarily BOV is going to understand the information being sent by Sparkasse. All right, so that is the problem.
We're forgetting one fundamental point here. It totally eradicated and eliminated the pseudo-anonymization of crypto wallets. So before you had just a combination of numbers and letters and numbers, now it became Miguel Attard, living here, date of birth, account number, and whatnot. All within that same message being received by the beneficiary institution. Again, privacy and pseudo-anonymization right over the ledge, which defeats the whole purpose of why crypto was born, or one of the reasons why.
Any more questions? Yep.
Hi, thank you so much for the fire chat next to the artificial fireplace.
We're on the spot, Joe. We're being placed on the spot, that's why.
Fellow colleague here, I work in the financial sector. I have worked in the investment fund industry and the banking industry in Luxembourg and here in Malta. And I have a question. Don't you think that the reason why crypto is not being adopted by traditional banks is a twofold issue? First, by regulators from the European level, so EBA, ECB, their inability to understand the technology, their inability to understand the futuristic potential of this technology, specifically talking about Bitcoin. And if you are following the news, you know about how Christine Lagarde talks about Bitcoin. She's completely ignorant about it. Sorry, yeah. And the second thing is the board of directors and the senior management within the credit institutions. They are very ignorant. And I'm speaking from experience. So when the senior management goes to say, for example, to the board of directors, okay, let's include crypto services. Let's issue Bitcoin-backed loans to customers. these people are risk averse. They know about traditional banking. And they also know that the regulations like the capital requirements regulation will impose to them huge amounts of capital requirements. Thank you.
I think you answered your own point there. But maybe a little caveat to that. Look, I think you mentioned quite a number of regulators, and let's talk about Brussels in general, okay, the EU. The EU regulator, the Commission, the ECB, ESMA, whoever it may be. And the credit institutions in general. We're all very traditional. Human nature is traditionalist, right? We seldomly would, the majority of people, leave their comfort zone and do something different. And unless you have the masses doing it and everyone saying, look, this is how it's done, this is what we're doing. In fact, there are quite a few memes, you know, like a school of fish, just all following each other, and then just that one little fish, Nemo, swimming against that school of fish. They're all going the wrong way, and Nemo is finding his or her way. The analogy is that, yes, most traditional banks are going to continue what they are doing. Why? Because capital requirements today are such a drag on their operations and their bottom line that they have shareholders to answer to. And shareholders want the banks to be profitable. If the banks are not profitable, if the banks are not doing well, if the banks are not solid and are strategic foundations to the European economy, then we're going to experience a situation where the banks cannot be relied upon. They cannot be the backbone of society. But the flip side of that is there are those Nemo banks. They started out as neobanks. They started out as EMIs. They grew into, look at the Revoluts of this world. Revolut started out as an EMI. And today it's this global behemoth, fully licensed credit institution. You're not going to have mass adoption of traditional banks taking on crypto service business or becoming CASPs today. A decade from now, maybe it's probably going to be a different conversation. There'll be a few more. There won't be all of them. But those that don't see the potential of this industry, like I mentioned earlier, the dawn of a new financial era where the two need to work together. Today, you have some of the global CASPs or the global firms that are in this space that are not only licensed as CASPs, they are licensed as EMIs. They are licensed as MiFID firms, investment services firms. They are seeing the potential of creating an ecosystem that is going to bring traditional investment services into the crypto space, traditional banking into the crypto space, and seeing the crypto exchanges as a means of an essence to an ecosystem. It's the perfect trifecta of licenses. And to be honest, if we don't adopt this, if we don't see this as banks happening sooner rather than later and looking to provide a solution to that industry and being the on and off ramp in your traditional fiat currency at this stage today, then those that don't see that are potentially going to be credit institutions that we forget about in 10, 15 years' time. Because the Mary Spitaris and Joe Bloggs of this world are going to be pushed towards a fate where all we are dealing with are digital currencies, are crypto, CBDCs, or crypto coins, stable coins on our phone, probably a chip in our wrist. We're not even going to need phones in the future because God knows what's going to be invented within the next decade. The speed of the pace of change in technology is out of this world. Like most of us probably grew up without a mobile phone, playing out on the street, you know, playing football with our friends. Today, it's impressive. I was chatting to a gentleman earlier where he actually he hit the nail right on the head. 60%, if not 80% of our day is on our phone or on a laptop or an iPad or a pad, a technological pad. It's all technology. It's crazy. I mean, we monitor our sleep today. We wear wristwatches or wristbands or have things in our pillows and our bed which monitor how deep we're sleeping and REM sleep and this sleep and recovery, and it's all about technology. It's impressive. And like you said, the Brussels needs to take this into consideration. But they are politicians, not practitioners. So until the practitioners get involved, there won't be this mass adoption. I think the gentleman in front of him also had a question.
We can take one more quick question. Please be straight to the point.
Sure. So I have one question to start with. I'm wondering, since there are so many cryptocurrencies and a lot of them are being created basically every single day, do you think that a lot of them will maybe disappear and we will have just a few of them that are being used as currency? I mean, for example, I think Bitcoin will always be here to stay. It's the first one and the one that everyone thinks about first. But there are other ones that are much faster for using for transactions. So maybe there will be other coins that kind of put that one out of the water.
Okay, let me maybe use an analogy to a different industry. 15, 20 years ago, there was this acceleration of gaming companies, right? Where you turned a corner and there was a new gaming company popping up in Malta. Why? Because Malta provided the regulatory framework, the ability to provide gaming services in other jurisdictions, comfort and peace of mind. And everyone was going into, everyone who had that appetite for it went into gaming. And there was a lot of money to be made. Today, it's a very similar situation in the crypto space. What do I mean by that? MiCA, as well as other regulatory frameworks throughout the world, are bringing about the mass adoption of crypto firms. Everyone issuing their own stablecoin, everyone issuing their own cryptocurrency, and also meme coins. The dark side to it. Get rich quick schemes, the issuers disappearing, whatnot. However, there is going to come a point, and we saw this within the gaming industry, where you are going to see a lot of consolidation. Those firms that are serious, those firms that have the right governance structures in place, those firms that have the right vision, those firms that have the right people backing them, those firms that are plugged into the exchanges that are regulated and global, are probably here to stay. We are going to see a lot of mergers and acquisitions, a lot of consolidations, and we're going to see various firms disappear. It's the natural course of doing business. But ultimately, if those firms are serious, well capitalized, and have the foresight of the potential and the right execution, then I think those are the ingredients and the recipe to hopefully a success story.
There will be a place for all of these serious.
It's inevitable. It's inevitable. There is a market for everyone. I think it's just the natural way of doing business.
Last quick question here.
Hi, thank you. Yeah, I'm a trader. I'm basically a retail customer for your bank, Potential. I tried opening a bank account with APS, with Lombard Bank, and as soon as they hear crypto, they kind of tell you to leave. And it seems to be working. I have a Crypto.com credit card, which apparently opened a Maltese bank account in my name, where I can deposit crypto and convert that into fiat and make cash withdrawals. What exactly is the blocker for these traditional banks in Malta to allow me to open a retail bank account?
Let's latch on to the conversation I had with the gentleman who's also involved in financial services. It's twofold. First of all, it's traditional in the sense bankers are going to stick to what they know. Crypto is a relatively novel topic in financial services, and not a lot of it is known. They cannot identify the risks, put their finger on, No, it's bad. It's crypto. They search crypto, it's this one's getting fined, that one's getting this, that one's working illegally, this hacked here. It's risk. All they see is risk, potential risk, and bad press, adverse media. And that's how the banks work. They want to try and keep as clean an image as possible, be totally risk averse, work within a traditional space. However, I think in time, and this is what happened to us, if we did not take the time to educate ourselves, to understand it, to truly identify the potential risks and bring the stakeholders of the bank together around the same table and even have the board supporting what we are doing, then we wouldn't be in a position to actually provide the solutions that we are doing at the moment. However, you then look at traditional banks, it is not their priority. Their priority is to support local economies, to support pillars of those economies, like the construction industry, the retail customer in their entirety. Yes, but their stakeholders want them to service the local economy. If you don't have banks servicing the local economy, then the local economy is not going to succeed. So ultimately, yes, their stakeholders and their shareholders are the primary concern and the primary goal of making them happy, making them money. You don't make them money, then they are not going to be happy. Ultimately, if you're a shareholder in a bank, you just want to see your dividend. But you also want to ensure as a shareholder that your bank is well capitalized, is risk averse, is doing well, and is there to stay and growing year on year, but not growing just in its profits, but growing stronger, ultimately.
So I have the last super quick question from Crypto Hub Bucharest. They are asking me if you are planning to expand in Bucharest with a new branch.
If I were a shareholder...
Miguel, we have an office there. We can help you get the banking license.
I am not a shareholder of the bank. I am neither on the board of directors. However, I will be sure to bring it to their attention.
Thank you for that. Thank you for this amazing fireside. It was very warm, very enjoyable. Thank you so much. Hey. So, there is this conflict between the mic and the box.